The Pinoy Boomer! Hello, kaboomers! This is the Pinoy Boomer back with another video. So today, I would like to have a quick discussion about the price to earnings ratio, or the PE ratio for short. This is one of the basic metrics that you can use in determining whether the share price of the stock that you're planning to invest is undervalued or overvalued. In simple terms, we say undervalued, overvalued, it means is the share cheap or is it expensive? The basic formula for the P/E ratio is first you get your current share price and then you divide it by the company's earnings per share or their EPS for short. Now, you can compute the P/E ratio yourself by dividing the price and the EPS, or you could just go to any financial websites like Morningstar and MSN Money, to name a few, and you could immediately see their PE ratios there at the beginning of at their main page. Okay, so how do you know if a particular stock is undervalued or overvalued using the PE ratio alone? So in the book, The Intelligent Investor, if the ratio would be 15 and below, that signifies that your stock is undervalued. Take note that if you're going to invest, it is better to have another ratio that you can use as reference to make sure that it is really undervalued. But for the sake of this video, let's just focus on the PE ratio alone. So in our example, so as you can see in the video, we will get the PE ratio of Security Bank. So here in the PSE Edge website, the previous close of Security Bank has not yet been updated. It still reflects the last price since January 19. But for the sake of this video, we'll just use it as an example. So if we have 71 pesos and 90 centavos per share of Security Bank and you want to buy it, so you go to the financial report section of this website, and then you can either use the current annual EPS under the income statement. So for current year, it is 14 pesos per share. Usually, we use the diluted EPS instead of the basic. So because according to what I have read, this basically everything's adjusted already. Other adjustments were made already for the computation. So you can use the basic or the diluted. But for our example, we'll just use the diluted EPS. And then so after, or the other one where you could get your EPS would be the current year to date. This is under the quarterly section. So if you want a basic year to date EPS, so you could use this. So, but for the sake of our discussion, let's just focus on the 14 pesos EPS. Now, if you divide the share price of Security Bank, which is 71 pesos and 19 centavos, and you divide it by 14, you will arrive at a PE ratio of 5.13. So, based on what is said in the Intelligent Investor, this stock, using the PE ratio alone, is already cheap at the current price. So, So there are basically things that you should take note when you're trying to interpret the PE ratio. So there are basically two ways of interpreting it. So the PE ratio of 5.13, you could interpret it as basically the price you're willing to pay for a share equal to its $1 or 1 peso of earnings. So Security Bank has a P ratio of 5.13, meaning I'm willing to buy uh, shares from Security Bank at 5 pesos and 13 centavos for every 1 peso of their earnings. So that's one way to interpret your P ratio. The other one is basically the number of years that you will get your you will earn from your principal. The number of years it will take for your principal amount invested to gain, to earn additional money. So PE ratio 5.13, it simply means that it will take 5 years, within 5 years, for your investment to grow. And there's an interesting thing with when it comes to PE ratio. If you want to know how much your money will grow, how much your interest will grow, all you need to do is inverse the PE ratio. Instead of dividing the price by the EPS, you divide the EPS by the price, giving you what we call the earnings yield. So, using Security Bank, if you divide 14 pesos by 71 pesos and 90 centavos, you will arrive at an earnings yield of 0.1947, or in terms of percentage, that is 19.47 pesos. So, to put that into perspective, so within 5 years, your if you invested, for example, 10,000 pesos at that earnings yield of 19.47%, that 10,000 pesos will earn an additional 1,947 pesos. So if you're going to compare that against the interest rates that we receive from the bank and at an annual basis, it is very significant. Okay, so if you're going to decide which companies you're going to buy your shares using the PE ratio alone, do not compare the PE ratio of another company against against another company where they have a different line of business. Like for example, Security Bank, and then you try to check if its P ratio is good against a company like Jollibee, which is in the food services. So they differ. They differ. So if you're going to compare to companies, they should by P ratio or in any metric that you'll be using, you should compare them under the same industry. Okay. So let's look at for the comparison of Security Bank BDO. So BDO right now, uh, as per the January 19 close, it is worth 136 pesos and 80 centavos per share. Now, we look for its earnings per share. So, we are using the diluted, which is 10 pesos and 72 centavos. So, if we divide 136 pesos and 80 centavos by 10 pesos and 72 centavos, the PE ratio would be 12.76. It means that for each 1 peso earned by BDO, you are willing to pay 12 pesos and 76 centavos for it. Or it will take roughly almost 13 years for your money uh, to gain. Okay, so and if you're interested, so what is the earnings yield of BDO? So if you divide it by 10 pesos and 70, if you divide 10 pesos and 72 centavos by 136 and 80 centavos, the earnings yield would only be 7.83%. If you compare it with the security bank PE ratio computations and earnings yield, it seems that in relation to banking, we will get more value in investing our money to security bank than with BDO. Okay, that is if we're just going to use the price to earnings ratio only. Now, so basically, guys, I would just like to point out that I'm not a financial professional to begin with. I'm just sharing what I've learned from the books that I have read. If you're interested to know what are those books that I read in relation to investing in the stock market, uh, please go to the video that's in the upper right corner of the screen to check it out. And and yeah, basically, so that's it for the video for now. So if you like this kind of content, please just click the like button. If you have any comments, please drop one in the comment section. And if I have earned your subscription, please do subscribe to this channel. Again, this is the Pinoy Boomer signing off for now. Until the next video, bye bye!